Hey, welcome everybody. This is Andrew Giovanazzi, Director of Education for OptionPit.com. Welcoming you to our YouTube channel and how to get short the VIX. Anyway, anything you want to look at Option Pit, go to our website here at OptionPit.com. And today we're going to talk about ways to get short the VIX. Now, I don't know, 10 days or so ago, we posted how to get long, 3 ways to get long the VIX. And then, like that Friday, we had a huge pop, VIX to 24, and then VIX to 50 and change on Monday. And it's since pulled back. I'm going under maybe lightning strikes twice, and VIX is trading around 19 right now. So we'll talk about ways to get short the VIX going down the other side. So today, a couple of things we want to just cover on getting short the VIX is basically, we'll talk about the VIX curve only broadly. Again, we'll talk about the zones. Remember the zones, there's 4 zones, 1, 2, 3, and 4. And all that is just the 4 quartiles of VIX. And then basically sort of how VIX futures move. Oh, I'm having a hard time. There you go, VIX futures move. And then lastly, looking at VIX options, kind of putting our 3 trades together. So the first part is like, what are you trading? So what the VIX curve is, remember the VIX curve is just a reflection of forward volatility in the SPX. Now, I will do a forward volatility video at some point. But for right now, what I want you to take a look at is, what are you getting? So here on Live Vol, we're going to go, which is a SIBO product, by the way. So they have some pretty decent VIX. You could also go to VIXCentral.com. And right now, the VIX cash is 1982. And then the August future is 1880. The SEP future is 1845. So one thing to understand is, again, as if VIX stays constant to expiration, the futures are going to move toward the cash slowly but surely. So right now, if you're looking at how things are trading, you would have to say, oh, wow, VIX futures are moving toward the cash, which is going up. So you have to separate the sort of what I would call the daily decay of the future, which right now is up. This is on Monday, August 12th. So right now, the future is decaying toward the cash, which is going to hamper like the daily decay profile of your VIX puts. The second part is actually how VIX cash moves in the shock. So what I do when I'm looking at, the VIX curve itself is, okay, where are you going to make your money, right? So is it the VIX shock? Oh, girl, I'm trying to do a video. All right. Be quiet. Sit, sit, sit. So one, you're either going to have the VIX shock, which is the VIX cash moving up and down, which is the sexy part that everybody likes, or just really how the VIX is going, VIX futures are going to decay. Which direction they decay. So again, VIX futures curve, okay, moves the VIX options. So it's not necessarily the VIX cash, right? Cash moves future, moves option. So sometimes the VIX cash can move a lot, but the futures don't move at all. Just depends on how volatilities and SPX are responding. So you could have that huge shock, like say on Monday the 5th. Um, you had, VIX, I think at the peak, whatever, there was a lot of weird prints, but VIX was in the 50s, but the future only got as high. Tradability wise, maybe 32. So there's about a 20-point discount with the VIX future and the cash on Friday, August 5th. Or sorry, Monday, August 5th. So again, trading these things, the future is the underlying for the term, which is important. So when you want to buy puts or you want to short the VIX, you're like, okay, VIX cash is going down, VIX is going down. So the futures have to be going down with it in order for your puts to make money if you're buying puts or you're selling calls, creating a combo, whatever, even shorting VIX futures, however you want to do it. But that's the important part is there's going to be, there's a shock and there's a decay, right, factor. The shock is generally the thing that's going to pay the most. The decay usually pays over time. So again, zone 1, 2, 3, 4, when we covered this before, why VIX zones? Well, if you look at like let's say a 1-year history of VIX. Now this is obvious, this here, right? I did my long VIX video here. I think we posted it there, and then we had a couple of crazy days. But you look at it, and this being an outlier, even though it's a huge spike up, didn't spend a whole lot of time in what I would call zone 4 above 24. So you have this huge move that kind of skews the average up, but it doesn't spend a ton of time there normally. Most of the time in the last year, we've spent below 21, which is zone 3. So 75% of the time we're in zone 3, 2, or 1, which if you look at the last year, as a sample, it was a relatively low volatility year. I would say we've been 90% of the time in below zone 4. So when you look at it real simply, zone 1 is, I guess, 899 is about the low VIX print, and that's going to go to 1299. That's one quartile, and you got 13 to 1799. It's the second quartile, and you have 18 to 2399. That's the third quartile. And then you have 24 and above. Okay. So there's your 1, your 2, your 3, your 4. Okay. Oops. 1, 2. Now, one thing I usually find interesting, okay, when is VIX and how is it going to move or what do I want to buy, is VIX just, again, this is an observation, but it likes moving down zone. So you spend time in zone 4, very volatile, and then all of a sudden we're not. Now we're starting to look for lower numbers because the realized vol is not being sustained, volatility is not being sustained, so things start to come down. You want to see what your VIX future is doing. So the cash can be moving, right? So this is VIX zone for cash, but how far can my futures go? So depending on the zone you're in, you want to see really how far your futures can drop. And basically, VIX futures are going to move, right? And they're going to move at some discounted rate. Generally, a 30-day future will move at a 50 delta or 50% of the VIX cash move. Now, as you go in, they'll move a little quicker. So if your future is going to expire, let's say 22 days, okay, that'll be more like, right, 60%. And then if you're going to be another 7 less, that's about 15 days. And we're going to be up to around 70%. And these are estimates, but it's just going to give you a rough idea. 7-day, okay, around 80%. And then the last 7 days, right, to expiration, the future is going to act almost 100%. no, under normal circumstances. There's some variation, but that's about it. So it's giving you an idea roughly of if the cash moves, how much your future is going to move, which means how much you can expect any option that you have is going to move. Again, these are rough guidelines because of, again, forward vol, backwardation, all the stuff that's moving the future around. Last, here's your VIX options. Again, your VIX options, the easiest thing to remember is VIX options trade off of the future. Future or the term. So if it's a weekly, that expires today's, let's say um, today's the 12th, 13th, 14th. So if it's a 14th, August 14 expiry, every option that trades in August for that expires on August 14th, they're going to trade the August 14 future. Right now we have an expiry next week on the 21st. So everything that's trading in the August 21 cycle is priced off of the August 21 future. That's the underlying. The only time VIX and the future will be exactly the same price is on the opening on Wednesday morning. Now, as far as shorting the VIX, there are different ways. I'm not going to really cover what I would call margin intensive ways, selling calls and call spreads. What I will say is that when you sell call spreads in here, because of the upside skew, and I just mean here you have 160 vol for the 20 call and the 30 call is 235 vol. So when you sell your call spread, even though it's a 10-point call spread, you're only getting like, 90 cents for it. It's not a ton. Now, that could be enough. It's risk controlled because it's a short spread. Remember, European exercise, so there's no early exercise. European settled, so there's no early exercise. But you can sell call spreads and buy a put, let's say an 18 put, excuse me, for, I don't know, for a 20-cent debit. So you're in, so that means you'd be into the 18 put for 20 cents, but you also have, literal like almost $1,000 in margin per trade, which is a lot. And here at 18, how much can you expect VIX to go down in a week? So I would again look at, me reasonably thinking probably 16. Realized vol right now is sky high. It's 25 or 28 points. But 30-day volatility is more like 18. So we're kind of like right there. But if you think VIX can go to 16, remember, you're not going to get full pop until, excuse me, VIX cash settles 16. So the most the 18 put can be worth is $2. If you have a 16 settle by expiration, the most the 18 put could be worth $2. So when you're looking at it, you're like, okay, I might be able to make about 90 cents if I land at a 16 and settle there. So the August contract, because volatility is relatively high, is a hard trade for VIX because you really need VIX to move around this week. You need VIX to shock much lower. I think easier trade in this case would be like a September contract. So how much, VIX can get down to 14, 15 in a month's time, right? If we don't have a lot of activity, if all the stuff that blew the market up kind of goes away, we're going to go back to the realized vol that we had, which is, 10, 11, 12, relatively low. So your 1 month cycle has a little better shot. So, but right now, because the futures are flat, you're going to pay full price for all your puts. So the VIX cash and the future is relatively the same. So if you pay $1.98 for the 18 put, you need to see 15, 14 to make any real money on them for them to basically double in value to get that kind of move. So what I'd say is you're waiting, I think, a little bit till you have a flat curve, which is what we have now. But using a little more time to expiration instead of less, you would need all your action to happen relatively fast, and you're paying a higher vol currently than where they are. So you have to see where VIX futures can go in order for your puts to pay. So in the example here, if I'm trading right now, our VIX future is trading 1880, 1877. We would need the future to get to 16 down to 2 points to really get these puts to move. And they're right now at roughly a 50 delta. The 18 puts are a 40 delta. So even with a drop in volatility, you might be able to get like $1 out of them. So in order for them to get to $4, you really need a long time and a long run down to a much lower cash VIX so the future can follow with it. So I would say this time, it doesn't mean it's not a bad time to buy VIX puts. I think you just need to think about a little longer time horizon than shorter time horizon. And that depends on what the volatility curve is and how high the volatility is. Now, that is not everything to say about getting short the VIX. There's lots of other ways or other things to do. Um, we could talk 1x2 spreads and things like that, but maybe we'll say that for another video. But for right now, I just, in review, first off, when you're looking to get shorter, the first thing is, are you looking at decay or actual VIX cash moving? How much is the VIX future going to move? And over with amount of time to expiration, what kind of move you expect? So if the VIX cash moves $1, the 30-day future will move roughly 50 cents. So you got to be realistic about what your move is going to be. When the vol's higher, short term is tougher because you need that cash to really, really move. And then lastly, here from a zone point of view, we're right at basically at near the bottom of zone 3. And then usually, mostly it takes kind of a month to break to the bottom of a zone. Not all the time, but it's a rough indicator if vol starts to drop. So it's the idea of where you price your options, where VIX cash can go, and then where the futures can go take the options. And that's going to determine how much money you're going to make on the trade. And then lastly here, just a reminder, any option you trade in VIX is going to trade off the VIX future or the term. That's the same as the option. And it's only going to be the same price on settlement date. You might get a touch before then if we get backward or something, or flat, relatively flat future to cash. But for the most part, the future and the cash is only going to be the same on expiration day. So right now, what I would say is, if we've got a little higher vol, we've had a little more action. I would look at a little more duration and see if we can get a little bit lower of a print in VIX and see if we can get to some lower numbers. And with that, that's Andrew Giovinazzi from OptionPit.com. You can go to our YouTube page, like and subscribe this video. Also, somewhere along the line, again, here we'll have a link to how to get long the VIX. And again, you could take a companion piece, how to get long it and short it, create a strangle. And then we'll see where VIX goes in the next couple of weeks. And with that, I'm Andrew Giovinazzi from OptionPit.com. There it is.